We still exist. Like, no banks failed today. We're still standing. The stock market didn't crash. Some things went up in value, some things went down. But overall, everything still seems okay. So, what is it? Is it the calm before the storm? Like, are things going to get worse? Or did they fix it? Like, did they do it? Some people are celebrating. They're saying, Joe Biden did it. Thank God for Joe Biden's leadership. Not even using taxpayer money. Don't call it a bailout. We didn't even do a bailout. So I'll tell you. And again, so far today, no banks failed. Not even First Republic Bank, which is top of the list for banks that are at risk. Hey guys, I'm doing it without the 5-minute countdown just to see how the difference is. So you guys get to tune in. It's like a show right away. Yeah, I'll tell you guys what's going on. I'll give you the latest news, so you're up to speed. I've been following it. Today it was eventful. I mean, some things happened that were a big deal that don't normally happen. They're kind of harder to explain the significance of. Things like the 2-year yield went down some kind of record amount today. And what does that mean? Right? So people were buying different things today. The things that I mentioned that they would buy, they did. People did. I said, okay, so people are going to buy bonds, bullion, gold and silver, and Bitcoin. And they did today, big time. In fact, Bitcoin was up a bunch. Oh, shoot. I forget to go live on Rockfin. Bitcoin was up a bunch today. It's still holding. Right now, over the last 24 hours, it's up 8%. But this morning, over a 24-hour period, it was up like 20%, like $4,000. Bitcoin. Bitcoin basically was around 20 grand. Now it's about 24,000. And it's still looking pretty strong. Some people are saying, Jim Cramer is saying it's time to sell Bitcoin. But this is exactly, so we're seeing exactly why Bitcoin was invented. People are actually, it's a good learning experience for people about fractional reserve banking, because people interested in Austrian economics and stuff have always said fractional reserve banking was a problem. Probably Ron Paul said it too. Fractional reserve banking is not resistant to a crisis. It isn't resistant to bank runs, which is why they're proposing things that are insane. Now, like guaranteeing every dollar of every deposit at every bank everywhere is going to be guaranteed by the federal government. So what does that mean? Or it's not yet, but that's what people say. People like, Bill Ackman. Bill Ackman has been saying, keep saying, oh, we have to guarantee everything. So like, what does that mean? How? Even though it's not a taxpayer bailout, is it going to be a taxpayer bailout eventually? Like, what did they do? I'll tell you kind of what they did. Okay. I'll try to explain it to you. So you can tune in here and I'll try my best to explain all the different things they're doing, hopefully in a way that you can understand. Some of the things are worth understanding, like why did Silicon Valley Bank have a hole in its balance sheet? Like what happened? And why does that have to do with raising interest rates? And are other banks going to be in the same situation from that Silicon Valley Bank was in? Even though people say, oh, Silicon Valley Bank screwed up. Well, okay, they screwed up. But did other banks in the same situation? The Federal Reserve is in the same situation. They have unrealized losses like crazy from rates going up. So I'll show you that. Let's see. I'll show you the news. I'll go through it quickly, and then maybe we'll take phone calls. Maybe we won't. Thanks for tuning in. Good to see you. If you want to support the show, you can drop super chats, or you can go to buymeacoffee.com/lifttheveil. Pirate X Pirate says Kramer says sell. That's bullish AF. Yeah, no kidding. Kramer did say sell. I have that. Let's see. Kramer urges. I just have the tweet from Watcher Guru where he says Jim Cramer urges investors to sell their Bitcoin, but he really did on his show. So then that's good. People talk about the reverse Cramer. Cramer said to buy Silicon Valley Bank stock. He said to buy Signature Bank stock, and those banks both went out of business. Okay, Signature Bank. This is interesting. Signature Bank, U.S. Congressperson Barney Frank, who authored like the legislation that regulates the banks, said that Signature Bank was actually fine, but they attacked it because it was a crypto bank. That's kind of scandalous. Apparently, they say, or that's what Barney Frank says. He says Signature Bank was fine, and that the only reason they closed it down was because they wanted to send a message to crypto people. But meanwhile, they wanted to send a message to crypto people. Huge crypto banks just got shut down. This shows you how Bitcoin is different than the banks that handle cryptocurrency. The problem with cryptocurrency lately, like the reason the value went down so much, was a problem with banks, with the banks that handle cryptocurrency. So cryptocurrency crashed mostly because of the failure of several cryptocurrency banks or cryptocurrency projects. First, it was Luna, a stable coin, which wasn't backed by anything, and failed, right? And then the cryptocurrency associated with it failed. Then a bunch of banks, cryptocurrency banks, that you could earn interest by depositing your crypto there. So they lent it out. So these banks, crypto banks, would take your crypto, lend it out, and pay you interest. So that was a thing. Almost pretty much all of them failed. And this caused crypto to crash. But it wasn't ever because there was anything wrong with crypto. It's because there's something wrong with the banks, which is what crypto is designed to solve, ironically. But the problem on the horizon for cryptocurrency still, if problems are going to arise, it has to do with counterparty risk, which cryptocurrency also was designed to remove counterparty risk. But there are cryptocurrencies that carry risk, the stable coins, because they're backed by dollars held in a bank somewhere. So with cryptocurrency, and that's why there was a problem with one of the stable coins, USDC, because stable coins have to be backed by real dollars, just like it was a bank. I mean, it's kind of like a bank, really. Buying stable coins is kind of like holding your money at a bank, sort of, because you have to rely on the issuer of the stable coin to have all the dollars, and they're supposed to have all of them. It's not fractional reserve or anything. So it still might be safer than a real bank, which doesn't have to have the money at all. At least with this, cryptocurrency is much different and in a lot of ways safer than the traditional banking system once you take all the risks into account, because the traditional banking system is inherently risky. Fractional reserve banking is inherently risky because if there's a bank run, the bank fails. SVB probably wouldn't have failed if not for the bank run, which was initiated basically by Peter Thiel.
So Peter Thiel said, "Oh, I'm pulling my money out. You should do the same." And everybody did. And then they couldn't meet withdrawals. That can happen to any bank, theoretically, if everybody tried to take their money out. And that's because banks aren't required to hold money to satisfy withdrawal requests. They're just not required to. So, in fact, for fractional reserve banking to work, it requires that it requires no bank runs. Like, it requires that people are always confident in the system so that they don't rush and try to take all their money out all at once. Because if they do, it's deadly. So the government tried to fix it. Like, they try to make sure that there are no bank runs, and there's insurance that covers up to a certain amount of your deposit, so that you're not inclined to take it out up to $250K. But what happens when a bank has most of their deposits, most of the money they have is over $250K? Then people, it's uninsured. But anyway, so that's what happened. Because the money wasn't secured, people withdrew it, caused a collapse. And here we are. So let's see. What can I tell you? Let me tell you a few things. Let's see. We might make this one. Kind of short, because I did give you guys an update this morning too. Thanks for people who tuned in for that. Let's see what I have. Joe Biden spoke today, and he said that the banking system is fine and it's safe. Your deposits are safe. And they said that they would guarantee the deposits. Okay, so let me explain that. Let's see. I might have the tweet explaining it, but I can explain it. A few things. Okay. So Joe Biden says, I'll show you this. Joe Biden says, thanks to actions we've taken over the past few days to protect depositors from Silicon Valley and signature banks, Americans can have confidence that our system is safe. People's deposits will be there when they need them at no cost to the taxpayer. How do they do that? Okay. All right. Check this out. FDIC, Federal Deposit Insurance Corporation. It's supposedly not part of government. It's actually insurance. So here's the deal. All bank deposits in the United States at FDIC banks are insured up to $250,000. And if you have $1 million and you spread it over 4 accounts, they're all protected. So you could, that's one way you can make sure your account is insured. It's actually insured, which means that banks pay insurance. All right. So how do they insure $250,000 for every account? Well, banks pay insurance. So that's part of what they do. So, and that is passed on to customers, or they have to make the money somewhere else, whatever it is, the insurance is paid, which means that people are paying premiums, which go into a fund, which then, if a bank fails and the bank loses deposits, over 250K, under 250K, then the fund pays for it. So everybody's paying premiums, just like car insurance or anything, or how health insurance is supposed to work, or anything, Social Security even. You pay in, right? You pay in for the insurance. So banks have been paying in for insurance for up to 250K per account. So there's a fund at the FDIC that can, it can pay to recoup losses, in the case that people lose their money because they've been collecting premiums. So that fund has, people are saying that fund had about $125 billion total, which isn't nearly enough. All right. So people say like the FDIC is underfunded. The FDIC does not have enough money in its fund. It's like $125 billion plus $100 billion line of credit, something like $225 billion total. If every bank failed, there wouldn't be enough money even to cover the $250,000 minimum, the $250,000 per account. Forget about everything else. If all the banks failed, if there was like a super crisis, the money wouldn't actually be there. So there is insurance theoretically. So this is the part where it's like it's not a taxpayer bailout. It will be. It's not a taxpayer bailout yet. Okay. It's not a taxpayer bailout yet because they still have some money left. But here's what they're doing. So in order so that, it was politically acceptable, they are taking money from this fund designed to protect deposits under $250K, and they're using it to pay off everybody at these two banks, which might cost $25 billion, might be $25 billion, let's say, which is a big significant part of how much money there is total just for two banks. It might be more. I don't know how much is a Signature. It might be $25 billion just for SVB. And like I said, they have like 125. So $25 billion. How long is that money going to last? Okay. And so anyway, what I'm saying is it's meant for balances under 250K, but they're using it right now for huge accounts, including Harry and Meghan. And, other people who maybe could afford to take the haircut, right? So if they're paying the huge accounts, the account could be billions, and it's getting paid off from a fund that's not meant for that. It's meant for the small depositors, under 250K. So, and the reason they did it, they went all in. They were like, okay, we're going to use this fund and we're going to go all in and protect everybody from these two banks. But if other banks fail and they do the same thing, then you don't have to be a genius to figure out the money's going to run out pretty fast. So, just add 3 more bank failures and the money might be all gone, zero. And how long would it take to rebuild that fund, just taking premiums from people? So yes, so far, there is no cost to the taxpayer because it's actually insurance. But if we extend, like what he said, Joe Biden said, Americans can have confidence that our system is safe. Okay. All right. So we can have confidence. So what does that mean implicitly? If he's saying all deposits, any amount, then there's not enough money for that without taxpayers. So for now, it's not a taxpayer bailout. If we continue, it will be a taxpayer bailout. What Bill Ackman is asking for is taxpayer backstop for every large account in the country without really consulting with the taxpayers about whether that's what they want. He just wants unilaterally the feds to declare that every deposit everywhere, every single dime, no matter how big the account, is safe. Okay. So the reason the government hasn't done that yet is because I don't know if he doesn't understand. I don't know. I really don't know. The reason the government hasn't done that yet is what do you mean? How? How do you guarantee all the money? You have insurance for up to a certain amount because that's all if you wanted to cover all of it, if you wanted to cover all the money, right? Let's say if you wanted to cover all the money in every account up to, infinity, then insurance would be way, way, way more expensive, and banking itself would be more expensive. So one thing I expect is that they already raised the limit. I mean, when the FDIC started, it protected up to $2,500. After the great financial crisis, it went from 100,000 to 250,000. Now people are saying 250,000 isn't enough. So what are they going to say? It should be a 1 million, 10 million, whatever it is. You have to pick something. You can't cover everybody, because what are you covering them with? Like, if you're implicitly, you're saying, oh, the government will pay, or, basically the government will pay no matter what. Well, who's the government? Where does the government get their money? If it's not an insurance program, if it's not Social Security or something, like, the government gets their money for Social Security because people pay into it and then they pay them back, right? Theoretically. That's the way it's supposed to work. Same with Medicare and stuff. You pay into it and eventually, and that funds it, and eventually you get the services. It's not free. So if we guarantee every deposit, it's not free. It's not free. So it means that the taxpayer is taking on the risk, the full risk of every deposit everywhere. And Bill Ackman says, like, without that, if that doesn't happen, then we're going to see more bank runs. And he might not be wrong, okay, because people realize fractional reserve banking isn't safe. It would be great if it was, but if it was, like, I don't have the video, but David Sachs is talking about it a lot. He's like, people didn't realize, right? It's not their fault. All these people at Silicon Valley Bank, the reason we had to bail them out is it wasn't their fault. They didn't know. They were just putting money in a checking account. They didn't know they were taking a risk. That's not taking a risk. But it has to be a risk. Like, if you give money to another person to hold it, and they say, okay, I'll hold on to it. I might do some other stuff with it, but don't worry. When you ask for it, I'll give it back to you. Like, if you give your money to another person and that's what they tell you, then do you assume there's no risk? Because that's what's being implied. I mean, that's what, like, these geniuses like David Sachs and Bill Ackman, they're like, oh, if you deposit money at a bank, there has to be no risk. Well, that's not a free market. That's not capitalism. I mean, basically, if that's the case, then why do we have private banks? Like, what are they competing over? How is it one bank better than another bank if all your deposits are guaranteed no matter what? What's the difference between banks? And so in that case, why not just socialize banking? Right? If that's it, I mean, if it's all guaranteed, then what's the point? Like, what does a bank do? Why are they a good bank? It's a good bank if they don't lose your money, if they have a good reputation, if they keep your money safe. But to these guys, it's like, oh no, you can't. It's like the system can't function if you think there's a risk to holding your money at the bank. So anyway, it's true that people are going to be more skeptical of holding their money at the bank, but they should be. They were taking a risk. They were taking a risk. Anybody who had an account over 250K with Silicon Valley Bank was taking a risk. If they didn't realize they were taking a risk, that's their fault. I mean, it was their fault. If they didn't know, and they have, I mean, if you have $1 million and you put it in the bank and the bank insures up to 250K, do you just assume it's like, oh no, it's 100% going to be safe? No, it's your responsibility to figure out how to keep it safe. So that's what people are trying to do now. I mean, so people have woken up to it. They realize that not all their money is safe and they're buying different stuff. So that's why Bitcoin was invented. It's why people own gold forever, is because you can't guarantee that the bank will hold the money. So how do you best store value so that you don't lose it? What's the safest way to store value so you don't lose it? And that's what people are figuring out. So they're buying gold, bonds, government bonds, and Bitcoin and silver, because those have been traditional. Those are ways to store wealth. Government bond, the government holds your money for a while. So everybody's been piling into them. Everybody. I mean, it was crazy today how many people were buying 2-year government bonds because, okay, it's not safe in the bank. Okay, I'll give it to the government and they'll give it back to me in 2 years. That's it. So that's what a government bond is. It's like, oh, okay, I'll let the government hold my money instead of the bank. See, so that's a bond. Or I'll put my money in gold. I'll put my money in a rock, gold, and that'll store the value for me until I'm ready and I can sell it. Or Bitcoin, store value. You own it. You can't lose it. There's no counterparty risk to gold or Bitcoin. There is counterparty risk to U.S. Treasuries, which is that the government doesn't pay, but people don't consider that a risk because the government prints money. So that's what people are buying. And I expect that to continue. I mean, they're saying the bank run didn't happen, and maybe because it didn't happen today and no banks failed today that it's over. I just don't know. I'll show you. I mean, here's the problem is interest rates went up a lot. Banks lend money to earn a yield with your deposit. They take your deposit, they lend it to earn a yield. In this case, the case of Silicon Valley Bank, that's what they did. And by lending, if you buy government bonds, you're lending money to the government. If you buy mortgage-backed securities, you're lending money for somebody to buy a house. So they bought mortgage-backed securities at a low rate. Interest rates went up, which caused the existing value of the debt to go down. And so that happened at Silicon Valley Bank, but it's happened everywhere. Like, look at this is I think this is our banking system right here. So that happened. Any debt people bought, any government bonds, any mortgage-backed securities people bought a year ago or 2 years ago is currently worth less than like face value. Because if you're going to pay face value now, you can get a better rate. You can get a higher rate. So you're going to pay less than face value for debt that has lower rate. Okay. Eventually, the debt with the lower rate will get paid back dollar for dollar at the end of the term. Okay, you guys get that? So if you buy a 10-year government bond at 2%, and if rates go up, and it's let's say it's $100,000, you get 2%, you're getting $2,000 a year. If rates go up to 5%, then if you want to sell the bond early, let's say after 2 years or something, people aren't going to pay you the $100,000 because they can make $5,000 a year at 5% at the current rate. So they're going to pay less for the old debt with the lower rate. If interest rates go down, the value of bonds goes up because now you have something that yields better than the prevailing rate. So, bonds can go up and down in value. Eventually, if you hold it the full 10 years, you'll get 100 grand back. But if you want to sell it early, you won't, because if rates have gone up, and in this case, rates went up a lot. So that's what happened to SVB, and that's happened in any bank that has long-term debt is in the same situation. They have unrealized losses. Like if they had to meet redemptions now, they had to sell stuff, they'd take a loss, just like SVB did. This is a chart that shows unrealized gains or losses on investment securities. So it shows you it's like $625 billion in unrealized losses. Unrealized, which means if they had to sell now, if they sold it now, they would take a loss, just like SVB did. That's what happened to SVB. They had to sell stuff at a loss. If they could have kept it, as time goes along, the bonds go back to face value because eventually they're going to pay a dollar for dollar. So, but in the meantime, they're worth less if you have to sell them now. So that's the unrealized losses right now on investment securities. So that's what banks are sitting on, which is why the other thing the Fed did was open up a lending facility with about $70 billion, I believe, which lends money. So I explained it. The debt has gone down in value. Debt people bought at low rates has gone down in value. So banks don't want to sell it now because they'd have to take a loss. So the Fed is saying they'll look at your debt and you don't have to sell it. And they'll let you borrow dollar for dollar, even though it might be worth 80 cents on the dollar. So here, Thomas Massey is explaining it the best. I mean, he understands stuff. Says, understand what's happening to the Fed. If a bank bought a $1 low interest rate bond from the Treasury, that's now worth 80 cents because of higher Fed rates. Fed will loan that bank money and accept the 20 cents of value that's disappeared as collateral. So that's what the bank said they'd do. They'd say, okay, you have these bonds that have gone down in value, right? They don't trade at par. They don't trade dollar for dollar. They're trading at some percentage of that. We're going to go ahead and give you dollar for dollar now so you can meet withdrawal requests. And even though it's not worth it. So that's what they're doing. Because at the end of the term, it will be worth dollar for dollar. But right now it's not. So that's what the Fed is doing. Show you what Peter Schiff says. During the 2008 financial crisis, the FDIC raised the covered deposit limit from $100K to $250K. This financial crisis is already so much worse that the Fed effectively raised the limit to infinity. That adds about $7 trillion in additional unfunded liabilities to the U.S. government. So that's what, so effectively, they've said all depositors are safe. You're covered. We cover these banks all the way up. That would add about $7 trillion in unfunded liabilities. So, which would be eventually the taxpayer. So far, no taxpayer bailout. Implied and asked for is taxpayer backing. That's what they want, is taxpayer backing. So we'll see. I'll show you the story with Signature Bank. You can support the stream. You can go to buymeacoffee.com/lifttheveil if you want to support the stream. Thanks, people. I've been getting some good comments about the financial stuff. Why regulators seize Signature Bank? Barney Frank says, first part, Frank, who helped draft the landmark Dodd-Frank Act after the 2008 financial crisis, said there was, quote, no real objective reason, unquote, that Signature had to be seized. Quote, I think part of what happened was that regulators wanted to send a very strong anti-crypto message. We became the poster boy because there was no insolvency based on the fundamentals. So that's Signature Bank, which apparently Barney Frank says was fine, but they closed it just because it was a crypto bank. So, all right, that's the news. There's some other stuff. There's stuff about trans. Oh, you know, the bank was kind of woke, right? So next on the, now you got to worry about, there are other banks that are also risky that people have been talking about forever, like Credit Suisse and Deutsche Bank. So personally, I don't think it's all over because I think the banking system was fragile. Here's this. Credit Suisse's default swaps hit all new high. So that's Credit Suisse. I'll show you this. So people are talking about how woke the company is. That's true. They were woke. They had a diversity, equity, and inclusion department. This is from the Wall Street Journal. It says, then there's this. In its proxy statement, SVB notes that besides 91% of their board being independent and 45% women, they also have 1 Black, 1 LGBTQ plus, and 2 veterans. I'm not saying 12 white men would have avoided this mess, but the company may have been distracted by diversity demands. So even the Wall Street Journal claims that maybe they were being kind of woke. Even though, the reason they failed wasn't specifically about that, but maybe they were focused on things they didn't need to be focused on. Like they could have been focused on their risk management a little bit better. Okay. All right. That's what I got. I've been busy. Extra shows, stuff. So I think that's what I got for you guys today. I could take some calls. Give me some coffees or something for the extra shows. Thanks, people who have been supporting the show. Appreciate it. Rip the Veil. I think that's new. Rip the Veil bought 3 coffees. He says, I love Financial Crisis because it makes Nathan feel the most comfortable going live, his most ideal environment to work with. I love daytime streams to put on while I work. I am stingy with my spending lately, but still investing in LTV since it is a wise use of my dime. Please subscribe and support this quality content and keep LTV going with a Buy Me a Coffee membership. Get yours today. Thanks, Rip the Veil. Yeah, you can go to buymeacoffee.com/lifttheveil. And you can become a member, like he said. Yeah, I'm tired. I'm actually tired, though, now. Early stream, went out driving today. But now I am tired. So I've been listening to the stuff all day. Just trying to let you guys know, like, exactly what's going on with it. Crypto's up. That's good. Silver was way up. That's good. If somebody wants to call in quick, I'll take it. 650 Gay Taxi is the number. And then we'll see what happens. 650 Gay Taxi is the number if you want to call in. And to donate, go to buymeacoffee.com/lifttheveil. I'll pin that, or I'll pin let's see, I got to go to this here. Yeah, see, even this stuff, it's so funny when I do this. Hold on, what can I show you? Look what they do to me on my shows. So I make the monetization. I go, oh, monetize this, right? Financial crisis averted or just starting. It's not controversial what I'm talking about. It shouldn't be censored, I don't think. But they still go limited monetization. That's what they do for all my stuff. Monetization limited. It means they'll just never show it to anybody. Every single video. Or it says ineligible. If somebody wants to call, you can. If not, I'll sign out. And I'll leave this as an easily digestible show. 650-429-8294. You should get some crypto, get some gold and silver. You can buy gold stocks. All that stuff should be good. Thanks, everybody, for tuning in for the various shows. Let me see. Let me go to the live chat. Cymatic Earth says all loans are fraud. Loans are important. I mean, it's important loans are important for the economy to work. It's going to get harder to borrow money, probably, even though interest rates have gone down. And there are other issues. Real estate is a bubble. And so we could be at the beginning of something serious, which is why we're covering it. All right, I'm going to sign out. Thanks, everybody, for tuning in. Thanks for the donos. If you want to support the streams, you know where to do it. buymeacoffee.com/theveil, or you can leave a super comment or something, whatever. I appreciate you guys. And we'll see you at the next show tomorrow sometime. If not early, then in the afternoon, 8 p.m. Eastern, 5 p.m. Pacific. Like the video, subscribe to the thing, give me donos, and be a good listener. And we'll see you at the next one. All right, for now, that's what it is.